Welcome, Lauren, to the Women Investor Wednesday podcast. How are you tonight?
I'm great, Beth. Thank you so much for having me.
I'm so happy you're here. It's been a while. We've been trying to get you on. I love your little setup there.
Thank
Very
you.
fancy.
We moved into this house in September, and this is a very long room. And so I was like, maybe I'll split it up with some bookshelves. So thank you for saying that.
There you go. So before we get started and we jump into your story, just in case we have some people in the audience that don't know why I'm doing this or why you're here, I just like to give a little intro. 5 years ago, I read a stat that of all of the mostly real estate investors in the domestic US, only 3% were women. And of that 3%, 50% were women that signed on their husband's guarantees on deals or inherited. And so that meant that I own some shopping centers. So I'm part of 1.5% of women who invest. And I said, that is terrible. We need to fix that. So I started interviewing women who I knew that worked in commercial real estate. And I said, do you invest? Yeah, well, where do you invest? The stock market? Okay, but you work in commercial real estate every day. Why don't you invest in real estate? Well, I don't have $1 million. Like, okay, you don't need $1 million. Well, it's complicated and risky. And so I said, well, where do you invest your money? The stock market. That's not complicated and risky. I mean, I lost my Netflix stock a couple of years ago, lost 80% in like a week. So I kept asking and digging and, investigating. And finally, really what it came down to was women didn't know other women doing it. And that makes sense because there's only 3% of us. So I said, okay, I can solve for that. So this was during COVID. So I did a virtual summit where I had 100 women and I interviewed 8 of them, similar to you, who were investors. And I had them share their stories with 90 other women. And since then, we've had 3 live conferences where the same thing, I have women come on stage, share their stories, then for like 20, 30 minutes, like a fireside chat. And then they go into a breakout room where they underwrite deals. They show women, this is how I have underwritten a self-storage, a multifamily, a student housing. But then I realized, because we keep that pretty intimate, we never do more than 250 women, that there's hundreds of women that I want to inspire to invest. So I said, let me do this podcast. So every time someone tells me, you need to interview Lauren or someone that they know that invests, I say, okay, let's get them on the podcast. So every Wednesday, I think we've done 50 interviews now with women that are investors, because I can only interview at the conference 8 or 9 women, right? So I'm just trying to expand the platform for women who may be considering investing or want to dip their toe in to learn from people like you.
I love that. That is so important. I don't know what the stats are in real estate investing specifically, but I believe when they study men versus women investing in stocks, like, women do better. I mean, we pick investments better. I think we really do a lot of upfront analysis. And I also think we don't panic when things get a little tough, and we don't do a lot of panic selling. And so this is a really important mission that you have. And I think it's important for women. I mean, it's hard to believe that it wasn't that long ago that we couldn't own property. We couldn't have credit cards. We couldn't vote. Right. So,
right. Couldn't have a mortgage. We couldn't apply for a mortgage.
Yes. I mean, we have a little bit of catching up to do as a gender. And I think that I love that you're doing this. I hope I can help a couple of women get started.
Yeah. And I mean, and I want to jump into your story, but it's like women, we were kind of raised to not talk about money.
Yeah.
Right. It was rude. You shouldn't brag, or it's none of your business. And I'm trying to fix that also, because I think that's why when guys are out on the golf course and they're saying, oh, I did this deal, or I invested with this deal, they are talking about it, and women are not talking about it. So we need to talk about money, not think we're bragging, or not think we're asking, it's none of our business. Let's talk about money. Let's get it on the table, and let's start growing our family's wealth. So Lauren Keen Aumond, tell us your story. So just give us like a high level, and then I like to dig deep and ask you some pertinent questions on stuff you tell us.
Sure, absolutely. So I grew up, I was always sort of into money. I was very curious about it. And I would ask my parents questions, things like that I didn't know were probably not the right things to ask, like, "Hey, how much money do you make?" and stuff like that.
Awesome.
And bless their hearts, they answered all of them. So I grew up being very aware of what my parents made and what we spent on things and why we made certain decisions that we made. So there was always a little bit of a propensity to understand money. When I went to college, I got a business finance degree. Looking back, it would have been cool if I could have got a personal finance degree because that's where my passion certainly is now. But I guess that was the second best thing. Did fine there. Ended up in a corporate sales career. I sold business acumen training to the bottom half of the Fortune 1000. That was my main career. And alongside of that, I did what a lot of young people do. I bought my first home. I bought my second car. My parents bought my first car for me. And then once I was in sales, I started making some pretty good money, especially money in like chunks, especially at the end of the year with commissions and bonuses. And so my dad had certainly taught me about Roth IRAs and 401ks. And I was in a very blessed position in my mid 20s where I already owned a home. I owned my car without a car note. I was able to max my 401k and my Roth IRA, and there was still some money left over. And so naturally, I was like, I got to buy a dream house in a golf course community with a BMW, which was not a good move. But the one thing that I did do in that moment was I kept my first house and I rented it out. So at 27, I did become a landlord. I reevaluated my life a couple of years after that and you know, s- sold that house and went into like a house hacking situation where you buy a house with multiple units, typically live in one of the units or live in part of the home and rent the other parts of it out, and went on kind of a house hacking journey for 4 or 5 years. And I'm just now, as of this past summer, done house hacking, but we've built our portfolio. We've kept the homes that we've house hacked for the most part, and that's like a really high level
Okay.
overview.
Okay. So I have questions. So first of all,
Mhm.
is there a personal finance degree available?
I don't know.
No.
I have a graduate certificate in personal finance from Boston University. So that was
Okay.
7 graduate level courses, with the 7th being the capstone. The idea being that will get you to the CFP designation. I don't think I want to become a CFP. I just wanted to have that knowledge. I have a podcast called Adulting is Easy, which is about personal finance. And I just thought that that would be helpful for my listeners if they knew that I had a little bit of a credential there, but also help me have the confidence to pass some of that knowledge along.
We're going off on all these tangents, but I hope you have some time. So, who is your audience for Adulting is Easy? Like, should it be my kids, my 21 and 24-year-old?
I have noticed that I've been doing this 5 years. As I've gotten a little older, my audience has gotten a little older, but it's US based, 25 to 40 years old, 60% male, which I think is actually pretty typical. When I first started, it was 80% male. So I've actually been happy to see not listenership go down, but the percentage of women increase over time. It started with my sister is 13 years younger than me. And so when I started this podcast, I guess I was like 30 and she was like 16. And so it started with me teaching her, just talking to her about this stuff. And she loves it. Like she loved I sign her a book every year, she's read Millionaire Next Door and some of the other ones, and she really likes it. I think that she didn't have the curiosity that I had around money to ask my parents. And
Right.
so, but I kind of forced that out of her by making her start this podcast with me. Only after about, I don't know, 6 months or a year, she ended up having to focus on SATs in college and stuff. And so it became me doing interviews about 4.5 years ago. But that's how it started. So the initial audience was meant to be that 16 to 21-year-old
Right.
range. But I will say we're about 25 to 40, which me at 35, I think they probably just hang with me because they're around my age.
It's, during COVID, when we all had so much time on our hands, I have two sons, so they're now 21 and 24. So they were 20 and 17, and I have three nieces, and at the time, they were 20, 22, and 24. And so what I did, and my older son had a girlfriend. So we had six young people between 16 and 24, and I sent them the Latte Factor.
Yep.
And I said, we're going to have a book club. And once a week for 30 minutes, we're going to go over 2 chapters that you'll have had to have read the week before. And you're going to have to discuss things that you read in the chapter. And if you show up, and I think I said it's going to be 6 weeks, it was like 12 chapters. I said at the end, and every week, if you show up every week and if you have things to discuss, at the end, I'm going to give each of you $500 and you can invest it or you can blow it. I'm not going to tell you what to do with your money, but I wanted to give them some sort of economics, personal finance lesson. They loved it. They're like, when are we doing the next one? But by then, COVID, as you know, in Florida was behind us and I was back to being busy. Yep. And I'm like, do your own book club. But
yeah.
But it was,
that's is that David Bach, I would think?
Yes.
Is that yes. Yeah. I don't think I've read The Automatic Millionaire. I've read Smart Couples Finish Rich, and I've read Start Late Finish Rich by him. Yeah. And those are really quick reads. Like for anybody that's listening, like reading 2 chapters in a week, I mean, you can read 2 chapters in probably 2 hours. So that's a great start. I love him.
Yeah. With that age group, I'm like, how am I going to get these guys' attention? But anyway, I love what you're doing. I'm going to tell all of them to watch your podcasts because now they're 29 to 21. So, but okay. Yeah. So, and tell me about business acumen training.
So I worked for a company. We actually sold business acumen board games. And so they were simulations. And so there's a really big, important concept in adult learning, but really learning for anyone, where we learn better when there's a story. We learn better when we're engaging multiple senses, such as being tactile, like using a board game. And a lot of people have a block when it comes to not just finance or business finance, but literally math and numbers. And so if you can make that less intimidating, yes. And we've been told we're not good at math, like men are, right? But, so if you can make something tactile and make it like kind of fun with these different colors, and you basically run a business for 3 simulated years. That was our kind of most popular version of it. And you move chips, you do very simple income statements and balance sheets over the course of the 3 years. You can do the cash flow statement, but we usually skipped that. And so the idea was to help people understand how to, increase income, decrease expenses, manage assets more effectively, and really make sure that they're connecting their everyday job to the strategy and finances of the company. And the goal was to have people understand when the CEO says this or the CFO says this, or they say no to this budget item or whatever, they're not doing it because they're mean. Like there's so much going on within a business. And so it was really fun. I witnessed so many aha moments, so much fun in learning. And I did that I was there for 7 years.
Wow.
I truly only left because it was a month before COVID, which probably was good timing, obviously. But I really left because the company that I worked for wasn't quite innovative enough, where people are like, that's cool. That takes half a day or a full day to do this whole simulation. Do you have anything I can do in 90 minutes? Do you have anything I can do full online? And I sort of thought, the company had expanded into other board games and things. I thought they should have expanded specifically the business acumen line and had a bunch of different things that they could do and do that online. And I just got, as a salesperson, it got to be harder and harder over the years to talk people into in-person training. Wow. And so I probably
love this. This is amazing. I hope that you maybe do something else with this. I love it.
Yeah, I mean, that company got acquired last year, and sometimes I think about calling them back up and see if I can help out again.
I love it. Okay, that's super cool. Okay, so now let's talk about house hacking. So tell us about, so you bought your house that you lived in as a 21 or 22-year-old, and then you made more money. You said, okay, like we all do. Oh, I should buy a bigger house, bigger car, right? Yeah. Instead of buying an apartment building, let's just go keep, buying something that doesn't cash flow. So great that you kept the first one, but that wasn't house hacking.
No, I did have a roommate with the first one, which I guess is technically house hacking. Didn't know that back then. Yeah. So it was 2012 when I bought the first house. I was 22 when we went our contract, 23 when we closed. My payment was $725 and he was paying me like $550 or something. So very good situation. Seems like a genius move, but literally rent would have been 800. So I can't really,
Right.
I just
And how did you get a mortgage?
I got a mortgage. I had worked in college. I had my parents paid for my living expenses. I had scholarships to cover books and tuition and everything. And my parents took half my paycheck and I kept half my paycheck. I don't think they definitely were paying more than I was for my living expenses, but so that was the deal we had. So I graduated college. I had like $13,000 and I had decent credit because I had like what you would think is dumb, signed up for some store credit cards to like save a couple of bucks on something when I was like young. And then I never used them again. So I had this like relatively long credit history as a 22-year-old, which is pretty funny.
That's
And so
funny.
I had three credit cards. My credit was in the 700s. I had $13,000. I had a job. I was actually the front end department supervisor at Toys R Us, making 15.75 an hour. And they counted my school as work history. So I didn't have to have the 2 years of work history. So yeah, got a house for $125,000, a 3-bedroom, 2-bath, 1-car garage house in St. Petersburg, Florida. And 12 years later, now I don't own that home anymore. That equity is actually in my 6-unit apartment building now. And we can talk about how that happened
Yeah.
later, but with no taxes. But yeah, so that was the house that I had. I wanted to sell that house so that I could put more down. I'd only put 10% down on that house, so I was paying PMI. I wanted to put 20% down on my second house. And I was telling my dad that I'm going to sell it. And he's like, well, how much is 10%? And I was like, I need like $28,000 to put 20% down. And he was like, I will loan you that if you keep your first house, which is
Good going,
interesting.
Dad.
He's great. He hates real estate. Like I can't say, but my mom, when they first started dating, my mom had a house and she bought her second house when she was 24. His parents threw her a party with a cake for having a rental property and they never bought another one. And so growing up, my parents had one rental property. And so I think that's what my dad wanted for me, have the one rental property. And so he
Dad.
ended up I was paying pretty aggressively that note to him down after that because did not like owing him money. And then he like paid for my wedding. So he like wrote off I had $19,000 left. So he paid for my wedding, which was 15 grand, and he took $4,000 that day. And then I
Oh,
had to pay for my own wedding out of pocket from there. But anyways, yeah, so that's what happened. It's fascinating because he to this day thinks real estate is bonkers. Like I just heard my husband walk in and he was fixing 2 washing machines at one of our properties. And it's like he would still think that's insane, but he really wanted me to have one. I just don't think he knew what he was accidentally creating at the time.
that's amazing. So you have the rental, you buy the new house. Did you get the Beamer too?
I got the Beamer. Hell yeah, I did. Sorry.
Okay.
Heck yeah. It
I
was
had a
awesome. I love
I
that
had a
car.
Jaguar. I got it.
It
So
was so great.
okay. So now what happens next?
So I had met my husband in between house one and house two, but like we were just dating. So I had bought both of those. And so that would have been 2017, it might have been 2018. We got married in 2019. And I feel like it was before that where I just like ran because I was making like good money. Like the year that I had to pay for like our wedding and stuff, I made like 200 grand, which was
Amazing. And
really
you were
good for
like
like, I was
27.
like 28. Yeah. It
Yeah.
was great.
Yeah.
I was really good at selling those board games.
Yeah.
So so I made that. He's an engineer. He was making like pretty good money, but like certainly the trajectory was there for it to be good. And so I like, I'm at this point, like I'm listening to Bigger Pockets podcasts. I'm reading landlording books. I'm reading personal finance books because I sort of thought like, okay, I accidentally did some good stuff here. I wonder what I could do if I did it on purpose.
Right. Right.
So I kind of was like, all right, I'm gonna run some numbers and I'm positive we're gonna be able to fire, like financially independent, retire early. Like we're making so much money. And like when I did that math, it was like, dang, like we could retire early. The math showed like 50 to 55, which is early, but I was like, at 28, that seems really far away. And I was like, as I told you, I wasn't super stoked with the trajectory of the company that I worked at because
Right.
I just thought they innovated in the wrong direction. I would have,
Right.
like I said, done more business acumen training rather than more board games. And so I'm
You would
like,
have
this
gone
could
deep.
go
You would have
away at
gone
any
deep
moment.
instead of wide, right?
Yeah, that's what I thought. We were
Yeah,
known for business acumen, but the owners thought we were known for discovery learning. So that's fine. It's their company. They can do whatever they want.
yeah,
But I got tired of sitting in the same strategy meeting every 6 months and us saying the same thing and not doing it. And so I knew, even though things were going incredibly well, I was selling a lot. I loved the people I worked with. I got to work at a high rise in downtown St. Pete. I had a hybrid. So I was at home a couple days there. It was really awesome for me. But I was like, if this ends or this changes, like, I don't really know that I can, like, what am I gonna, I'm gonna have to do something I don't like. So I'm gonna have to sell products I don't like. I'm gonna have to work with people I don't like to get us to 50 or 55. And so that was really eye-opening to me because despite the fact that I mean, really good money, like I don't know what he was making, maybe like 100 grand, but that means like I was 28, he was 25, we were pulling in $300,000, no kids, and we still had to work till 50. So that was just, I know I've said that a few times, but I just can't tell you how much of an crap moment that was for me. And so that's when, and I already had the one rental. And so that's when I thought we need to do more so that we have freedom, so that if and when things change, we don't have to be stuck in a career or a job that makes us miserable. Because I knew from working at Toys R Us for that year that I did, like, like, that was horrible. I truly hated, like, every day getting up and going, which we know where that company went. So,
yeah.
um, but I just didn't want to get to that place ever again. And I knew that we were doing the 401k. I don't know if we were both maxing 401ks and both maxing Roths at that point, but we were certainly doing something. But even that money is 59 and a half money. I was
Right.
like, we have nothing outside. I mean, our cash flow is our W-2s. And
Right.
that was, and it sounds silly. I mean, I just spent a ton of time telling you I'm passionate about personal finance. I'm doing retirement accounts. I have a rental property. And it took that much for me to have that moment and think, hey, maybe the house on the golf course community and the BMW was a little premature.
Okay. So then what? Like, so did you say, let's go buy a house, sell the house on the golf course and get a duplex and we'll house hack? Is that what happened?
Yeah, basically. So,
Well, so did you go to your husband and go, I like
yeah,
living here, but we need to sell it and go
yeah,
get a duplex
yeah,
that's half the
yeah,
size?
yeah,
And what
yeah,
did
I
he
did do
say?
that. He's like, we just moved in. I was like, well, it's been almost 3 years. I mean, like, um, my goal wasn't duplex at first. My goal was house with above garage apartment that we rent to a long-term tenant, which I didn't think would be like that invasive. Like, you still have a single family home. And so that was the goal at first. And he was like, no, because we're married at this point. And now, like, I can't just make my own financial decisions, buy whatever house I want. And it took him about 15 minutes to come around, which was really quickly. And he was like, we'll look. I was like, fine, I am okay with that. And so what we started doing, this is just pre-COVID. Yeah, just pre-COVID. This is like January, February 2020. February 2020, I changed jobs. So I knew I was going to be 100% remote. So I know that was something we were thinking about. I'm like, and he was working full remote at this point. When we bought our house on the golf course community, he was commuting to Tampa. I was commuting to St. Pete. It was about 20 minutes for each of us. Now I knew I was about to go remote. He was full remote. I'm like, I want to live in a house. Like, if we're going to move, like, let's put it all on the table. Like, let's think about some cute community. Let's think about something where we have the bike trail near us. Maybe we can walk to bars and restaurants. And so we started, like, every weekend we would go to dinner at a restaurant in a small town along the Pinellas Trail, which is like a 45, 50-mile bike trail, and tried to find the ones that we liked. And we finally settled on Tarpon Springs. We just really liked and still love the vibe. And interestingly, there were two houses for sale that were super similar, which is kind of wild. But one was a 1910 4-bedroom, 2-bath with an above garage apartment and like a pool house. And
Wow.
then another one was a bed and breakfast that was a 1901 home with like a little studio apartment in the back and a little no two like a studio and an efficiency in the back. So very similar homes. Um so Valentine's weekend 2020, we went and stayed at like, oh my God, this dumpy motel because we had showings at one on one day, Saturday, and one on Sunday. And so we're like, well, let's go really try out the town. We had a great time. It was awesome. I mean, of course, a month later, everything shut down for COVID, but it was nice. And we decided on the non-bed and breakfast at first. And it had a pool, which my husband really liked. But when I sort of did the math, I was like, we're not buying a place and getting a rental, like, quote unquote, like for free. Like, we could just mathematically buy another house and buy a rental and be in the same spot. Like, I didn't feel like we were getting the economies of scale because it was so much more expensive that I wanted in house hacking. I mean, I wanted to basically sell my house for 350 and then buy a house for that or around there that had a rental, right? And this house was 550 or something.
Wow.
And it needed some work and it required flood insurance, which I didn't love. And flood insurance was 8 grand. And I really didn't think it would flood. It did flood in Helene. We didn't buy that one, but I didn't really think it would flood, but I didn't want to pay the flood insurance. So I was like, this other one, the bed and breakfast, it was 280. It was, well, she had it listed for 350. We renegotiated all the way through the COVID shutdowns and stuff because she wasn't doing well because it was a bed and breakfast. And anyways, we
Wow.
got it down to 285. And so I knew like if we put some cash into it, we'd be like around I thought we'd be around 420 into it. I thought it would appraise for about 400 after we were done. And we'd have two rentals in the back,
Right.
which I thought was really cool. And it had this kind of special zoning because it was already a commercial bed and breakfast and it's next to City Hall. So it has the City Hall lot there. And so that is the direction we went. Again, I really thought we were going to have long-term tenants, but when you buy a bed and breakfast, your mind starts thinking we should have guests, not tenants. And so that's what started us down this path. And the lady that owned it before us, she lived in one of the little cottages and rented out the rooms of the house. We decided to live in the house and rent out the rooms in the back. And so we did that for 3.5 years until we found kind of
So
like our dream
did
home
you
here.
jump on the New Yorkers coming to Florida wave after COVID? Is that who leased your spaces in the
Yeah.
back?
Oh yeah, hardcore. I mean, we did a ton of work to that property. I budgeted 160 for the remodel. We spent 159. It's pretty good.
Mm,
I don't know
was
why I thought I could do this, by the way, at like 30. Having never I did like a bathroom before, you know what I mean? I don't know why I thought we could do this, but we pulled it off and it took
what work did you do? What was in the 159 that you did?
roof, full structure replacement, total yard remodel and gut, fence, full gut and remodel of one of the small units, light
Wow.
remodel of the other one, floors, kitchen, bathroom.
That's crazy. And you guys did it. Well, your husband's an engineer, so
He
he's
is,
got
but we
some
mostly
talents,
hired
right?
it out. We mostly
Okay.
hired like he would do everything if I would let him, you know.
Yeah.
But I'm like, we don't have all day. Do you know what I mean? And I had the money. This is back when I still had like the money. So it was sort of up to me at the time. And but like he built the deck and he did some of the flooring and stuff. But like he would have put cabinets in there, but like no, we hired it out. We got like really, I mean, I shopped it around. This is like just pre-COVID remodeling boom. And so we got like good negotiated deals on stuff. And so
So
yeah,
so
that
that
took
so that you finished the renovation and then we're in the middle of COVID. So and they were empty, these units. So how
yes,
did you start getting
we closed in June 2020. So we went under contract like March 13th. Then the world shut down. We went out of contract. Then we renegotiated for $50,000 less. And then we closed June 8th. And the remodel was done late December, which is perfect because peak season for Florida is January. And
right?
so those two, and there was a mobile home on the property as well that we had removed and we replaced it with a camper. And so June 2021, we had the camper and the two cottages ready to go. And we were like off to the races, obviously. Like that was put like slightly post COVID, so like so much pent up demand and it was
Amazing.
great. And we also in January 2021 cash out refied the house. So like I said, we had put 160 in, we only got 100 back out. But the following June, about almost a year to the day of when we had closed on that one, we bought a duplex with that down payment. So we
Amazing.
did that as well. Yeah.
How much rent did you get on the cottages and the camper? About? Do you
Oh,
remember?
that's a good question. The camper wasn't a lot. I mean, we had it priced pretty high because we didn't want a ton of wear and tear on it.
Yeah.
I mean, I know we paid 12 for the camper and we rented it for 2 years and we brought in 22,000.
Did you sell it?
No, we still have it.
Okay. And then the cottages, what rents were you getting on those?
Well, rent is hard, like, the short-term rental, so there's like more
Right.
cost to it than you think, but they do between 35 and 40 each.
Okay. All right. So so now you're living in the house, you fix it up, you're
Mhm.
not working, right? This is your job.
Oh, no. I was full on still working. Yeah. Oh, yeah.
With a new job.
Yes.
You left the game company
Yes,
and went
I
to
was
a
still
different.
selling training. I left
Okay.
I sold training. I sold custom training for 2 years, then I sold safety training. And so it was actually 2023, mid 2023 that I left my job. So this is like 2021 we're talking about. Like I'm
Okay.
full on working full time. He's full
Wow.
on working full time. Yeah.
Okay.
And then we bought the other duplex, like I said, the following June. And then we bought the 6-unit apartment building in
This past December.
December 2021.
Okay.
So it was like bam, bam, bam.
Tell me about the apartment building.
So that first house I had sold that I bought, like I said, in 2012, I sold it in 2019. Is that right? Yes. I had lived there 2 of the last 5 years, so there were no capital gains taxes. So I had that money kind of sitting ready to go. And then in late 2019, I bought a duplex on the south side of St. Pete, about a mile from Tropicana Field, which just made new headlines recently for getting its roof ripped off in Milton. But I thought this is going to get better. Like we're talking about the new stadium and whatever. And I was prepared to ride that out. COVID came, absolute nightmare. Like no rent, squatter. It was horrible. That was all going on while we were remodeling the other place, by the way, the bed and breakfast. So I owned that duplex. We ended up keeping it for 2 years. So all my equity and down payment, everything, equity from the first house is in this duplex. I paid cash for that duplex. Then we did a 1031 exchange of that duplex into the 6-unit with seller financing. And so the equity from my first house went no taxes into the duplex and then deferred taxes via 1031 exchange into the 6-unit apartment building.
And you're 35.
I'm 35, but I was 31 then, like 32.
Amazing.
Yeah,
Amazing.
that was that like, and I don't bet it sounds smart when you say it like that, but like there was no grand plan and everything was freaking.
But how did you learn
scary.
about the 1031s?
Probably from I read a lot.
I get,
You know?
yeah, and maybe bigger pockets, probably.
Yeah, I've read a ton of books. Yeah.
Have you ever been a part of a mastermind, like a shoot off from the bigger pockets? No. Okay.
No.
So do you still own the apartment building?
Yeah, that's in Cedar
Yes.
Key, actually. Which
Is it okay?
It's fine. Yes. It hasn't been a great couple years, but yes, it's there.
I didn't think Cedar Key was still around.
I know. Well, we just had the best October we've ever had.
Thank gosh.
For horrible reasons.
You got FP&L to fill it up, right?
We've got, just a lot of
insurance companies
that are like remodeling the homes and stuff right now.
Oh.
So, and in our Tarpon Springs places too, where, we've got people that are displaced from the hurricane. So, it's
sad.
Cedar Key is going to be okay. I've been up there. I went up there after Helene. I went up there after Milton. There's a few places open. Like Cedar Key is going to survive. I was super worried after Adalia. I knew they were going to rebuild. After Helene, especially after getting hit just 1 year later. And for people who don't know, Adalia put a 7-foot storm surge into the downtown of Cedar Key. Helene, a little over a year later, about a year and a month later, put 9.5 feet. So it's pretty devastating. But our apartment building is downtown, which is cool. And it's at 15.5 feet. And it's like super strong. It's just, it's a great building.
And you had flood insurance.
We did. We dropped it. I dropped it yesterday, but we did have flood insurance, but I did just drop it because it doubled, which I was mad about. I'm like, we didn't flood. Never even got close.
So you must not have a mortgage on that.
I do. It's seller financed and he doesn't require it.
Okay, good. Thank goodness.
Yeah,
Yeah,
we
that's the
didn't have
thing
flood
with
insurance.
seller financing, because if you have a mortgage, you're required to have certain insurances that you can't, like wind.
Right. Yeah,
Okay,
we have
so
wind. Our balloon is due. It was a 7-year balloon from 2021, December 2021. So it's December 2028. So we figure we'll maybe the guy will refinance us, or we'll refinance into an actual commercial loan and then get flood insurance, or we will sell some stocks or sell something else to pay it off at that point to keep it going. And someday, really, I would like to sell that building seller finance to some young investors. I mean, this guy's making some pretty good interest, but we're making really good money too. And I would like to give somebody the chance that he kind of gave us, you know?
that's amazing. So what is your portfolio now? Give us so it's the apartment building. Do you still have the duplex?
I sold the duplex in August
Okay.
and it flooded in September because I thought it would flood. So I was like, we have a different duplex. So yeah, we still have the bed and breakfast. Just that the house part is empty right now while we're trying to get a long-term tenant in there. So we have the bed and breakfast with the house and the 2 cottages. We have a duplex around the corner from that. We have the 6-unit apartment building, and then we just bought we did it for real this time. Like bought the dream home. Like it was like warranted this time. We did the work up front. I we jumped the gun a little bit in 2017, but 2024 we've worked for it. And my husband now, he's not just an engineer, he owns a very successful engineering firm and things like that. So I have been I've had the Adulting is Easy podcast for over 5 years now, and I manage the rental properties and also just like little things, but like my aunt and uncle's house flooded for Helene, and like I was able to go over there and help with stuff. And
Yeah.
so I spend my days like I hang out with my nieces and nephew, and I go see my sister, and I hang out with my mom and my grandmas, and I've been doing that for a little over a year now, and just our portfolios I think pretty much stabilized. We have, how many is that? 3, 4, 5. We have like
So
11.
what's next for you for acquisitions?
Don't know right now. Everything I have is in Florida. As you know, Florida's rough. I mean, the insurance is tricky right now.
And you
Probably
and
will.
you don't bring in any partners. So this is just you and your husband, all of the
Yeah,
portfolio.
I would like to have partners. Like I would like to have more of like my 6-unit apartment building, but like 8 or 10. So if I could trade the bed and breakfast or the duplex into something like that, I probably would. We haven't fully made that decision. I mean, with that, like I said, that's 6, 7, 8, 9, 10, 11. That's 11 rentals. That's a lot. I mean, it's 11 doors, right? 3 properties.
Right.
And we just sold the other duplex. So, that's enough for me to do. It's enough for me to wrap my head around. It makes decent money even after all of the insurance adjustments. It'll make more
Right.
now that we don't have flood insurance. So we really are, having just bought our home, we're sort of focused on this one, and then the engineering firm too. It's growing a lot, and I'm like sort of unofficial advisor and counselor to that a lot of the time
I'm
too.
sure.
So,
Well, you know, so I do a lot of LPing with jockeys. I bet on jockeys. So I own shopping centers in South Florida, a small portfolio. I'm 64. I've been doing it since I'm 32. So I started LPing with 8 shopping centers, and then I left that company and started doing it on my own and have raised family and friends money. But now that I'm 64, I don't want to GP a lot of deals because it's a lot
yeah,
of work, right?
yeah,
So now I like to give a check and get a check. So
yeah.
with my mission in inspiring women to invest, I'm meeting a lot of great women. And like 2 women just bought a limited stay hotel 3 blocks from Lambeau Field in Green Bay.
Nice.
So I gave them money. And, another woman is doing a flex warehouse in Oakland, California, and she's a rock star. She spoke at my conference last year. So I gave her money. And there's a woman in South Florida. Her name is Natasha Falcone. And when I first met her, she had done a 6-unit, an 8-unit, a 6-unit, and an 8-unit. So she's on my stage and I'm interviewing her. And I had just invested in the last 8 units she bought. I said, okay, so you own 24, whatever, 25 units. What next year when you come back to the conference, how many are you going to have bought? And she said, 50. And I'm like, no way, you need to have 100 units. And
Yeah.
so,
Yeah.
the next year she's in the audience, and I'm introducing, starting the conference. And I said, who remembers Natasha? And people raised their hand. I go, how many units? What was my goal for her? And they're like, 100 units. I said, Natasha, stand up, tell everyone where you're at. And she was at 102 units. And
Yeah.
I've been able to invest. I've invested with her in the last 4, but she started looking for bigger, like the next,
Yep.
I think her most recent was 37 units.
Yeah, I
Right.
feel like once you get to 50, you're competing with, I don't know if it's the Grant Cardones of the world, but there's a nice sweet spot there, like 10 to 50 that I would consider getting into. We definitely have had people close to us approach us, like, how can we invest with you? And my husband, I don't know if it's like only child thing that he's got going on, but he doesn't want to like let anybody in. I think we've taken a good amount of risk with our own money, but I don't know that we would feel as comfortable raising money from them. But we've definitely considered GPing and like syndicating and things like that. We definitely consider just doing the pure LP. Just take some
Right.
money, sell some stuff and do that. And I don't think it like, I think it's okay to DIY it, mom and pop it yourself and then go into LPing, because I also don't really know how you could have a feel for the numbers in the game and the analysis if you hadn't done it hands on yourself. I think you can, but for me, I just know that like I'll be super comfortable and I'll know what I'm looking at when I look at the projected numbers and things like that if I ever do want to invest as an LP. So, and I would always like to keep probably at least for a while the Cedar Key apartment building, because I think we got a good deal on it. Cedar Key is going to survive, and let's be real, it's the best property on that island at this point. So.
Exactly. Well, just think that we're 30 years between us, right? So you've got a wonderful future, you and your husband, ahead of you in whatever you decide, whether you do more GPing, you do some LPing, you can LP with other women or other people on 50 units. Yeah, this niche she's got is she's not competing against the institutions or the
Exactly.
big players, right?
Yep.
But buying a 37 unit is just as much work as buying an 8 unit.
Exactly. Well, and that's what
So,
I've learned. Like my 6 unit is not the same amount of work as like 3 duplexes. Like it's
right.
definitely less. And
And
that's been eye-opening for me.
right. And that's what she found out too, because I kept going, why are you sticking with 6 and 8 and 6 and 8? Go get a 20, go get a 30.
Yeah,
So, and
exactly.
one of the last few deals she did was all women. She syndicated it was all women she met at the conference.
Amazing. I mean,
Amazing.
that's huge. What I also will say is, like, when I started, I had the 2 homes. I'm 3 years older than my husband, but also like I just am a girl, so I was just a little more with it than him. He had to grow up a little bit. I mean, he did good getting the engineering degree, don't get me wrong, but he had some learning and growing to do. And I started it on my own, and it was hard at first to let him in and let him have a voice and make some decisions and stuff. But becoming a partner with him on the financial side was hard at first, but I definitely think had I kept doing it, thinking of just myself and doing it just on my own, we wouldn't have nearly as much as we have right now.
That's
You
amazing.
definitely you do not need a partner. Like I started without one. Like you don't need one, but having one, if you can be on the same page, like I'm lucky enough that he is. I mean, I could have easily, Beth, gone to him that day and pitched my house hacking idea and him say no, and then like, what do you do? So I was very lucky that he was on board from there and that he's been on board every step of the way since. I
That's
do
amazing.
think with him being so focused on the firm, the next step probably will be mine. Will be pretty much me because he's busy. And so
Yeah.
we'll see where we go from here. But just been taking a year to kind of breathe and stabilize and see a little bit what the interest rates are doing, what the
Yeah.
insurance prices are doing, and I think we'll be making a move probably in 2025 again.
That's amazing. I'm so, you inspire me. You inspire me. And I just can't wait to watch the next 10, 5, 10, 15 years. Well, as long as I'm around. But so we have women usually that we replay this, obviously. And what one piece of advice would you have for someone that it hasn't put their toe in the water yet, but they want to?
Listening to podcasts is good. Networking is good. Reading is good. You can only do so much of that for so long. It's not going to be one more book or one more podcast episode that's going to give you all of the information you don't have. Investing, it takes a little bit of faith. It takes acting when there's ambiguity, and it takes a couple of deals. I mean, in terms of real estate, it takes a little bit of time, even with like buying stocks, to see the results of what you're doing. But in the beginning, definitely learn, but definitely trust that you know enough. Trust who you are as a person. You've gotten through hard things before. You've made tough decisions before. You can do this, and you need to do it.
Excellent. Yeah. And you think about it, think how much you learned just sometimes putting in offers, even if you don't get the deal, the things you learn by looking for deals, underwriting deals, figuring it out, running the math, right? Trying to find a mortgage. There's so many pieces,
Absolutely.
even if you don't buy something.
Yeah. I mean, to this day, my husband and I, like I said, we just bought our house, which we paid $1 million for over the summer. So we're like, what I'm saying is like, we're not in a place to make another investment right now, probably. Right. But like every day we're sending each other properties, and like, we'll be like, this one's a good deal. This is a good price. And like, it's so validating when you see it go fast and you're like, I knew that was a good deal, So even some of that, like, just the more you look at it, the more you analyze things, the more you just know in your gut when a good deal is there. And even that can build confidence, being like, yep, that was good. I knew that one was bad. Oh, look, that one that those people overpaid for 2 years ago, it's for sale again. I knew they overpaid for that, and I knew they weren't going to be able to finish that renovation or whatever, all of those things. Every looking at every deal is a learning opportunity and a confidence building opportunity. I knew when I got into real estate that I would change the properties. I truly underestimated how much that would change me and make me a resilient and confident human being.
And cementing your instincts. Right?
Exactly.
Cementing your instincts. Okay. Well, Lauren, it's been a pleasure. Thank you so much for coming on. Where is the best place for the audience to find you if they want to follow up?
Yeah, I mean, definitely follow the podcast. It's called Adulting is Easy. Should be able to find it everywhere you listen to podcasts. Social media wise, I'm most active on Twitter, X at Adulting is Easy, but I am on Instagram too at Adulting is Easy Real.
Got it. Yeah, Twitter is great.
I enjoy it.
Oh, thank you so much. Have a wonderful evening. And I hope to see you soon. Now that I know that you live in St. Pete, Tampa area, I go up there every once in a while. I'll reach out.
All right, let's do it. Thanks, Beth. Thanks for having me.
Okay, bye-bye.